A common misunderstanding is that getting a first-time buyer mortgage UK explained is hard and takes a lot of time. It's not like that. Today, we'll talk about everything you need to know to get a mortgage for the first time and buy your first home in the United Kingdom. Right now, getting ready is the first step to getting your first mortgage. We need to get you ready, which will take a few steps. But we need your deposit first. We can't get a mortgage without down payment, so we need a down payment now. It's possibly you don't need as much as you think. We don't need more than 5%. So if you're looking for homes that cost about £250,000, you'll need a deposit of £12,500. If you're looking at homes closer to £350,000, and that's £17,500, then you find a home for £450,000, the 5% is £22,500, and so on. For those who already know where this is going, but for the time being, all we need is a 5% down payment. Hello everyone, welcome to Success Wisdom. In this video, we're going to talk about Beginner's Guide for First-Time Buyer Mortgage UK Explained. If you're new to this channel, do like and subscribe to the channel. People often say, well, I only have a 5% down payment, but I could probably get 10% in 6 months or a year. Should I hold off right now? I don't think you should because rates are going up and property prices are going up. In my opinion, the sooner you get on the ladder, the better off you'll be in the long run. Who's to say that your extra £5,000 in 6 months won't still only be a 5% deposit? If rates are also going up, the sooner you can get a new mortgage, the better. We need a small amount of money to pay for some fees and other costs. I'm going to go over each one with you. First, there are the fees for lawyers. Most of the time, I tell first-time buyers to set aside £3,000 for solicitors. It might be a little less than that, but it could be that much, especially if you're buying a flat or leasehold property, which can add to your solicitor's bill. Then we might have to get ready to pay an arrangement fee. If the mortgage lender charges a fee, you can often add that fee to the loan. So if the mortgage lender charges a fee, you can often add that fee to the loan. So if the mortgage lender charges a fee, you can often add that fee to your mortgage. If you're borrowing 95% of the value of the property, you might not be able to add a fee on top, but there are some mortgage rates that don't have any fees at all. So that may not be true most of the time. Let's assume you don't have to pay an arrangement fee for your mortgage up front. So now, we're talking about stamp duty. In most parts, First-Time Buyer Mortgage UK Explained don't have to pay stamp duty on purchases up to £350,000. For anything over that, you have to pay a small amount of stamp duty. So there is no stamp duty up to £350,000. Say there is no stamp duty or it is only a few £100s. Most mortgage brokers charge fees, but some don't. Some of the bigger mortgage brokers who work online or in call centers may not charge a fee. The usual cost is £550. Most brokers will charge about the same fee. You might need to have the land surveyed or valued. The lender will always have to do a valuation. They want to know that the property is worth what they think it is worth and that it won't fall down soon. That's all they need, and most of the time it's free. Most big banks will do that for free. If you want more information about the property's condition, you might have to pay for an additional survey, but you don't have to. So, most of the time, we can probably get by with about £3,500 to cover most of the fees and costs you'll have to pay to buy your first home. Then, once we've put all of our fees and costs aside and have our deposit, we need to start looking at how much you can borrow, so we need to do some affordability checks. We're going to do an investigation, which means we're going to find out a lot about you and what you do. We're going to get all the details about your income and expenses so you know how your salary or income is made up and if it includes things like overtime bonuses and other similar things. Then we'll look at things like your loans, credit cards, student loans, and other similar things. All of these helps us figure out how much money we can borrow. We'll try to get money from different lenders to see who will give us the most. Because some lenders are much more generous than others, we'll find the right combination of who has the best rate and who will lend you the most money. And then, we'll let you know how much you can borrow. If your income changes from month to month, Like if you get a bonus or work overtime, most lenders will take an average of the last 3 months to figure out how much you can borrow. So if you have 3 really good months, you can borrow a lot. If you have 2 bad months in a row, you might not be able to use that overtime number, which could mean you can't get as much of a mortgage. So if your pay goes up and down a little bit each month, you should know that. We already know which lender we want to work with. Now, we know they'll give us enough money to do what we want. So the next step is a credit check, an agreement in principle, a mortgage principle, or a decision in principle. It goes by a lot of names, but they all mean the same thing. It's a credit check to see if the lender will give you the money you want. So we put your information into their system. It checks both your credit history and your credit score. Let's say they're going to look at everything you've ever done with money. If you paid everything when you were supposed to, they'll say, based on the information you've given us, we'll give you a mortgage. So that's the first thing we need before we can go out and look for houses. Before we continue to tackle the topic on how first-time buyer mortgage UK explained, if you like this video, don't forget to like and subscribe to the channel. Most real estate agents you talk to will ask you if you have an agreement in principle. Then you can say, yes, I'm all set. Then we just have to find a house. Some people will look at one house, and if they like it, buy it. Some people look at houses for months and months, but they still can't find the right one. We hope that you'll be somewhere in the middle. There's no need to buy the first one, but if you don't think you'll like something based on what you know, you should still go see it. Online ads, pictures, and other things can be deceiving, so I'd say check it out even if you're not sure. Because when you get there, you might think, oh yeah, this is the one for me. But either way, it doesn't matter how long it takes. We need to find a house, and when you do, we need to make an offer and have it accepted. After that, we still need to do a few things. Here is where the hard work begins. We're going to put in for a mortgage. We need you to do a few things. We need your documents, like your pay stubs, bank statements in your name, and other things that we need to give to the mortgage lender. You have to tell your lawyer what to do, which means you have to give them a few £100, usually 300, to get the ball rolling and start their work. We also take our broker fee at this point. So once we've sent in your mortgage application, you'll have a few £100 and the rest if the money will come later. When your offer is accepted, your mortgage application is sent to the solicitors. Find out what to do now. As part of this process, we'll show you what a full mortgage looks like. All of the costs are broken down in the illustration, including the monthly payments, the percentages, the annual percentage rate or APR, and so on, as well as the total cost over the term. It has a lot of information for you to give so you can keep track of what your new mortgage will be. There will always be some back and forth from the lender with questions. Sometimes, you just have to fill out an application and send in all the necessary paperwork, and that's all they need to know. A lot of the time though, they'll come back with more questions or want to know what this payment is on the bank statement or where your deposits come from. Depending on the lender, this can happen a few times, but after a few weeks, they'll usually say, yeah, we're happy with the mortgage. Either you or they will have paid for the valuation, and then they will get a mortgage offer. This mortgage offer is the official document from the lender that says, yes, we will give you this money for this property. You get a copy of that, and so do your lawyers. That way, everyone knows where we are and how much your mortgage will be. Your solicitors will do a little bit of work for the lender. They will do some checks and other things with the lender and let the mortgage lender know that the property is safe to put their money on. The solicitors will also do a lot of things in the background, like checks, searches, and asking the vendor, who is selling the property, questions. They'll ask you a lot of questions to make sure the property is safe and right for you to buy and that you won't have any problems in the future. So that's a really important job for the lawyers to do, and we need to pick a good one. So far, so good. We have a mortgage application, it's been approved. We have an offer, the valuation was fine, the lawyer's work was fine, and now they're happy. We'll start by talking about moving dates, and then we'll move on to something called an exchange of contracts. The one is very important. Everything is legally bound here, so you have to buy the property. You have to buy it from them. Nothing can be changed. This is when you need to give the sellers of the property your deposit money. However much it is, just like you would when buying a new car or something similar. You would also have to pay your legal fees at the time, and as usual after getting your deposit. Then you've given yourself a deadline. There have been trades of contracts. Everything is happening. Set in stone is a date by which the work must be done. Now is the day when everything is done, the day to remember the full amount is sent over. The lender gives you a lawyer to handle the rest of the money. They give you the keys, but you get to move in. You can now do whatever you want in your new home. So we've gone from the beginning to the end. We've been saving for the deposit, all the fees, all the costs, the application, the process, and everything else. We've reached the end of another video and thank you for watching. I hope you have learned how First-Time Buyer Mortgage UK explained. If you like this video, do give us a like, subscribe to the channel, and comment down below. Thank you and goodbye.